Hey guys, hope you're all doing well. I'm just here at AUS CRYPTO Con. Got my little pass here and the VIP bracelet. It's going to be interesting, and I'll keep everybody posted. I'm going to take some footage inside, and it's going to be very interesting. Stick around, because I'm going to be visiting the OKX booth as well. We'll see you soon.
Here we go, a well-known American entrepreneur, the executive chairman and co-founder of MicroStrategy, a published author, an esteemed speaker, and what I would say is the biggest Bitcoin bull in our ecosystem, Mr. Michael Saylor. Put your hands together.
Yay!
Hello, Michael. Thank you for being here.
Nice to be with you, Tracy. Thanks for having me. Sorry I can't be there in person, but I'm there in spirit. Looking forward to our discussion.
Yeah, well, I'll start off by saying congratulations, you're finally in the green. Like many of us here, it has been what seems like a very long crypto winter, but it's been a great few weeks. And look, for those who have dollar costed average into the market over this, this winter, we finally are in the green. And what we want to know from you is, you've done very well, you're finally in the green. Will you continue to buy Bitcoin, or will you just hold your current position?
You can never have enough Bitcoin. I think the right way to think of this is Bitcoin is going to grow in a serpentine pattern with rapid burst of growth, some drawdown, but on an exponential curve. Right now it's like 45 or 50% compounded annual growth for the past 3.5 years since we got involved. And I think it'll just continue to grow at a high growth rate between 20 and 40 or 20 and 50% for the next 1 to 2 decades. And it'll gradually, the overall long-term growth will probably go from 45% annual to 40 to 35 to 30 to 25 to 20. And it'll hit a terminal growth rate of like 15%. And when it hits that terminal growth rate, maybe 20 years out, maybe 25 years out, it'll be growing twice as fast, or compounding twice as fast as the S&P index or any other diversified, high-quality portfolio of assets you could buy. So if you think about it like that, you just say, well, where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity. Once you get that idea, then the logical thing to do is just to continue to sweep your cash flows into it from month to month to quarter to year to year. You could call that dollar cost averaging, or you could just call it, savings. But, there's no end in sight. I mean, if I told you you could buy Bitcoin at 100,000 and it was going to go to 6 million, and you were going to get 60x your money, then why wouldn't you?
Is that financial advice?
I am an advocate of Bitcoin.
Look, we'll move on to the next question. And there's an auditorium here of maybe 15 100 people, and some of those I would assume are big followers of yours and probably watched all your YouTube videos like I have. But I really want to talk to you about your Bitcoin and property analogy, and there's probably some new people here who haven't heard you talk about this, so I'm going to go down this path, and I love listening to you do this. So you've stated that Bitcoin is the best property in the world. Can you elaborate on that, and what makes Bitcoin the superior asset compared to traditional forms of property, and how this perspective has influenced MicroStrategy's investment in Bitcoin?
Sure. Well, you know, when you think about investments that you're going to hold a long period of time, the two that stick out are, should I buy a diversified portfolio of companies like the S&P index, or should I buy a bunch of real estate? And if you buy real estate, like real estate in Miami Beach went from $10,000 an acre to $10 million an acre in less than 100 years. So that works out to be a 7 to 8% growth rate per year, every year for 100 years. And if you have that perfect portfolio of stocks and they're very competitive, then you might get something similar. But when you look at it, investing in stocks is very complicated. Like, name a company that'll still be here in 100 years. Like, how do you establish the S&P index? So if you take a 3-generation or a multi-generational view, it's kind of hard to figure out how I would buy a bunch of companies and hold them 100 years. But on the other hand, holding property for 100 years is very straightforward. You know, the royal family of Japan, or the royal family in the UK, or royal families in the Middle East, they just buy up all the best property and keep it for hundreds of years, right? How long has the British royal family had the center of London? 500 years, 1,000 years, right? The emperors had the center of Tokyo, 1,000 years. So holding the middle of Manhattan, or holding, if I could basically, you remember, I walked through the botanical gardens in Sydney, and I thought it's the most beautiful thing. What if you could own it? Like, what if you could own that entire garden? I don't know, what is it, 50 acres? It's spectacular. Would you ever sell it? Probably not. You know, you would probably keep it.
Afford to buy it now.
Yeah, but you know, like 500 years ago, right, someone came along and it was there. And so now, property is a good investment. And the reason property goes up by a factor of 1,000 is because if you look at it, what you realize is politicians can't make more of it. You can't print more property. The garden is the garden. The Sydney Harbor is the Sydney Harbor. You're not going to wake up and find out that there's 100x as much beachfront property as there used to be. So when the money supply expands by a factor of 100, and the number of acres on the beach in Miami Beach stays the same, the price per acre goes up by 100. And that's why property is a good investment. The problem with property is you have to buy it in chunks of buildings at a time or acres at a time, and sometimes the best property isn't available for sale. The second problem is there's property tax. So if you owned all the property in the middle of Sydney, you're going to get taxed on it by the mayor and by the province and by the country. And a lot of times people can't afford to pay the property tax for 100 years. And then if someone zones your property, or if there's a war, what if you owned the nicest property in the middle of a war zone? What if you owned all of the nicest property in Ukraine, in Kiev, right? It might be devalued by the war. It could be devalued by a pandemic, by an earthquake, by a tsunami, by a tax. And you know, if I handed you $10 million and you lived in Africa, and you had a choice, buy $10 million worth of property in Zimbabwe, anything in Zimbabwe for $10 million. You could pick anything you want in the entire country and buy it for $10 million. Or would you rather buy Bitcoin, $10 million worth of it? Well, the property in Zimbabwe, maybe it's scarce, but it could be impaired and it's not mobile. And maybe you don't want to live there. And maybe the people with the money in 100 years don't want to move there. So it's not clear that you'll be able to mortgage it or rent it or sell it or carry it with you. But on the other hand, Bitcoin is capped. Bitcoin is like Manhattan in cyberspace. It's 21 million city blocks in a cyber Manhattan, and one day 8 billion people will want to live there because Everybody in the world, all 8 billion people in the world want to be wealthy. They all want to keep their money. There's no one that doesn't want Social Security and economic well-being, not from now to the end of eternity. For 1,000 years, people are going to want the money. So if I created the most stable, most secure, most immutable crypto asset network of 21 million blocks, and everybody in the world understood it, they're all going to want a piece of it. There's only 21 million blocks, and a lot of it's been lost, you know, so probably we're down to 16 or 17 million Bitcoin. And the thing about Bitcoin, which is better than property, is A, it's scarce, but B, it keeps getting more scarce. When people lose their keys, there's less Bitcoin, you know, not more, and it's mobile, and it's portable, and it's fungible. And it passes what I call the Bernard Arnault test, which is if you want to make a good investment, you should buy something scarce and desirable that someone richer than you and more cultured than you and smarter than you will want to buy from you in a decade. And that's what I think of when I think of Bernard Arnault, someone richer than me and more cultured than me, and I wonder, would he want to buy this thing? And clearly, $10 million worth of hotel space in Zimbabwe probably may not be that appealing. And you never know with real estate whether the person you want to sell it to is going to want to buy it. And of course, people can make more real estate. They certainly can, you know, not all land is scarce. I mean, the beachfront property is, but farmland in Kansas isn't. There's plenty of land in the middle of Australia that isn't nearly as desirable as the Botanic Gardens in Sydney Harbor. So you got to choose your real estate very carefully, and you can't move it. And if I can't come to your country, I don't want it. But Bitcoin is scarce, it's desirable, it's a global thing, everybody understands it, and I can move it. I can have $1 billion building in Manhattan, it won't move, but I can have $1 billion Bitcoin building, and I can send it to Singapore, or I can even get a bank in Singapore to loan me money against it, or maybe want to custody it, or maybe want to borrow it at some point, or I can find a wealthy individual in any city in the world that will want to buy it from me. And you can't say the same for a piece of property in a certain place. So I see Bitcoin as digital property. It has all the great attributes of trophy real estate, but it doesn't have the liabilities and the risks of real estate because it has no physical nexus. It's immutable, immortal, indestructible, and global. And common sense says, if there's 100 billionaires and they're all bidding for your thing, the price is going up. Whereas if there's only one billionaire, you know, that would want that thing, then they will feel like they have you over a barrel and they can give you a lowball bid because there's no other buyer. And so if you're gonna own a trophy asset, you wanna own something which has global appeal, and you wanna be able to take it with you or move it if necessary in order to make sure the value is not impaired. That's why I think of Bitcoin as the apex property of the human race.
Thanks for that explanation. Maybe if we can get the abridged version, I need to explain that to my dad, who's a cattle farmer in rural WA. He's finding it hard to get his head around that. So thank you for that. Look, let's change tact a little bit. I'm going to go to smart contracts and ordinals because there's been a lot of advancements there. And do you believe that this was really in line with Satoshi's core views? And how do you envisage this change and use case and the volatility and security of Bitcoin? Do you see this as an issue?
Yeah, I think Bitcoin is a protocol, and I think it's a good protocol, and it's an asset, and I believe anybody should be able to buy the asset, and anybody should be able to use the protocol. I reserve my criticism and skepticism for people that wish to change the protocol. And so I'm very conservative with regard to that. When I look at Bitcoin, I say, well, Bitcoin is the greatest monetary network in the world, but it's the greatest monetary network because it is the most trustworthy, indestructible, immutable database with the greatest integrity. And it has the greatest integrity because it's a decentralized network and it's running on millions and millions of computers, and we could go into why it is, the most immutable network, but I think we all understand it is. When I send you $1 million of Bitcoin, I'm sending a message from me to you. You wouldn't want it to be hacked or blocked by an enemy of yours or a hostile nation state, and it's a pretty important message. But the real beauty of Bitcoin is I can put any message on that blockchain or on the Bitcoin network and know that it will be there in 100 years. And I can send a message even in the middle of wartime through a war zone, and I can expect it will make it to its destination. That's what it means to be a fault-tolerant, mission-critical, indestructible, immutable database that's truly decentralized. So I think that with regard to ordinals, it's an interesting application, and I actually support all the likely application of Bitcoin. I think that people will burn identities, decentralized identities on Bitcoin, and there's no reason why I wouldn't put, my identity, burn it on the Bitcoin base layer as an orange check, and then start to digitally sign documents and encrypt documents using them. Some are going to fail, some are going to succeed. Most will fail, but ultimately, what is it worth to be able to timestamp and notarize a message forever? Like, what's it worth to actually have an immortal document or immortal timestamp? And what is it worth to have an indestructible piece of information? And what is it worth to send an unstoppable message? I think it's worth a lot. I think if the country is at war with another country and you're trying to send a message from point A to point B, and someone's trying to hack you, I think it might be worth $1 billion to send that message. It's certainly worth $1 billion to send a message conveying $1 billion from wallet A to wallet B. So I think that the block space is undervalued right now. I think that, on slow time periods, you could do a Bitcoin transaction for a quarter, was the transition from this being a retail offshore, unregulated asset to this being an institutionalized mainstream asset. And by the time we get to the end of 2024, I think that it will be an adolescent mainstream asset. So I think that this next 12 months is going to be it's going to be a very big 12 months, because you have demand should double or triple or maybe go up by a factor of 10, anywhere from 2 to 10 demand to buy on a monthly basis. And the supply available for sale will be cut in half in April. And so instead of $1 billion of Bitcoin available for miners each month, it'll be $500 million. And so it's pretty unprecedented that you would go from supply-demand balance of maybe there's $15 billion of organic demand and $12 billion of organic supply. What happens when the one doubles and the other one cuts in half? And then the price has got to adjust up. So I think this is a big 12-month period. It'll be a coming out party, right? It's kind of like the graduation of Bitcoin from college, if you will, and coming out into the real world. And then I think the next 4 years, from 2024 to 2028, now you're going to have ferocious competition among Wall Streeters to get the most asset share, and you're going to have crypto exchanges competing, and you're going to have tech companies getting involved. Cash App sold $2.5 billion of Bitcoin, a quarter or something like that, so $10 billion a year. At some point, you're going to see all the other mobile tech companies, the Facebooks, the Apples, the Googles, et cetera, think, why wouldn't we want to sell 10 or 20 or $50 billion of Bitcoin a year? So I think 2024 to 2028, that's going to be really the go-go year. It's going to be very exciting. We're still in a high growth stage. I think, we'll stay in a high growth stage until big tech has adopted Bitcoin, when there's 2 or 3 or 4 billion handsets with Bitcoin built into them. you know, that'll be one check. The other check will be when the big mega banks all are Bitcoin custodians, when JP Morgan and Morgan Stanley and Goldman Sachs and Bank of America and Deutsche Bank and, you know, every bank, Commonwealth Bank, when all of them say, it goes without saying that of course they've got to actually custody Bitcoin and make loans against it. When they're making loans and giving you mortgages and custodying it and buying it and selling it, I think that'll be the second check, right? And then the third check is when the entire money management community, right? All the money managers, all the wealth managers, when all of them are recommending Bitcoin to their clients, and it's just a universal global monetary index, right? And I think that those three things are going to drive massive adoption. And when they've all happened, then we'll move into the, you know, to the moderate growth stage. It'll still be growing well, but it won't be explosive growth because all of them, I guess the last thing I left off would be when countries, when central banks of nation states are buying Bitcoin, right? That's the fourth leg of this. When all those four things have happened, it's just going to grow twice as fast as everything else, right? But until that's happened, it's going to be a lot of sparks, a lot of fire, a lot of excitement, a lot of green candle days, a lot of FUD, a lot of arguments, you know, a lot of gnashing of teeth, and it's going to grow 2, 3, 4, 5x faster than the next best thing, I think. With volatility, right? With sharp drawdowns, with bursts up to the upside. And if you're going to take a 40-year time horizon or longer, you'll be fine. If you try to trade it with a 4-month time horizon or 4-week time horizon, you're going to give yourself anxiety and nervous fits, and probably you'll wreck yourself. So my advice is enjoy the ride, figure out how you can contribute to the Bitcoin ecosystem using whatever skills, relationships, and know-how you have, and assets you have, and keep your eyes on the horizon, you know? I mean, there's a better world here for all of us, and we've never had such a great opportunity. So take the long view and enjoy the ride.